What's up, guys? Welcome back to another episode of Stock Talk with David. I'm David. In this video, we are discussing Sam Adams, also known as the Boston Beer Company, ticker symbol SAM. So again, we know Boston Beer, we know Sam Adams. They're almost interchangeable, although Boston Beer owns Sam Adams. But this brand, the company, they own the Sam Adams brand. They own the Dogfish Head. Truly very popular, and also the big part of their problem right now, Twisted Tea, Angry O, and some other smaller ones. So before we get into it, if you're not already subscribed to the channel, please click the subscribe button, turn on the notifications so you never miss a beat. The very first thing I want to talk about, and by the way, this is not financial advice, this is just my own opinion for educational reasons only. If you're not sure if this is a good investment, talk to your financial advisor. They will help you out. So the first thing I want to talk about, this stock has been on our watch list ever since this giant sell-off here with its earnings. That's absolutely huge. So they went from about $400, $500 a share, somewhere in here, all the way at the peak over $1,300, and now they're down to $500. That is a lot of volatility in a short amount of time. Now, like I said, what's interesting is that this can mostly be attributed to the hard seltzer slowdown. It's been plaguing them the past couple of quarters. If we look at the earnings call, you can see here that the CFO have said, yes, we've been playing to win. We decided to really go hard to produce as much hard seltzer as we can. It just didn't work out. I'm not going to read every highlighted thing here. But this is what's interesting is that at this paragraph, following the rapid slowdown this summer, actual hard seltzer fell below our internal low side projections. They had too much inventory, too many high input costs and finished goods, and it really just threw things out of whack. Now, what I like about it is despite all of that, the underlying business hasn't really changed for the other brands. So check this out. Depletions for the quarter increased 11%. This is across Twisted Tea, Truly, Sam Adams, Dogfish, also with Angry O, and shipment volume for the quarter was about 11.2% increase from the prior year. That's actually really nice. That's encouraging to see, as it means that the underlying business, by and large, hasn't really changed. The only thing that's changed is the amount of hard seltzer that they bought and the amount of hard seltzer that they produce. They just didn't keep up. They just didn't measure the supply with the demand, and it really cost them on the bottom line. I still think the company has a great underlying financials. I mean, if we look at the margin here, about 41% is the estimated for the rest of the year, nearly 42%. We get into 2022, though, they're going to increase it to 46.7%. And again, that's an estimate. But anywhere close to that, and I don't think it's priced in, obviously, by looking at the stock price. That's a really encouraging thing to see. When we get in here to let's look at this. We get into the estimates. We can see that this is the big problem. They literally lost a ton. 2020, 18.22 earnings per share, and a little over $5.21. That's a huge decrease. Of course, it's going to destroy the stock price. We get in here, though, we see revenues rising. Net income, kind of like your retained earnings, really nice, really bad, really nice. Even nicer in 2023. Net debt, not increasingly worried about it. Free cash flow, really nice, really bad, really nice. So if you see the trend here, it's that they did really good. They had a bad year. It destroyed the stock price. And then the next year it gets really good, supposedly. And that's a good thing to see. I mean, even when we take our income over the revenue, that's a really good level to look at. And we will see that at about going from 3% in 2021 to a little under 10%. That's a great thing to see. We also have net share buybacks / retirement at about $5.5 million worth of shares outstanding. So that's another good thing to see. If we can limit the amount of shares that are issued, the company says we have all this excess cash. How do we deliver shareholder value? we're going to buy back the shares, and it internally pumps up the share price. It's one of the key things that Warren Buffett looks for in something like this. And so that makes me really excited. We get into our return on equity. And the way that we got this one, we're going to go in here to our ratios. We get in here to the ratios. Let's see, return on equity. So they got about 22.7% in the last 12 months, 10.2. Again, as the earnings increase and as they do a better job with net income, revenues, etc., you'll see this actually pop back. And so all that this is measuring is just how good did the company do using other people's money. And that's really what's important. SG&A margin 34, I mean, that's right in line with what we're tracking it at. So that's a good thing to see. And so like I said, this company, there's not a whole lot that has changed. With the revenues going higher, with the earnings getting better, it makes a ton of sense about why or how this company can actually increase the stock price. And so that's a really encouraging thing to see when we talk about other catalysts. So behind, like I said, behind the seltzer mishap, underlying business didn't change. Truly is expected to increase about anywhere from 5 to 10% of the market share coming from the quarterly. New flavors, so they're going to have different Angry O flavors. They're going to have different collabs with PepsiCo, making a hard Mountain Dew, etc. A lot of the short-term debt is being paid off, and so when we get in here to the cash flow, and we can see some of the short-term debt, like we said right here, short-term debt repaid, that's a lot. So whatever they had in a revolving credit facility, that's being paid. Repurchase of common stock, like we talked about moments ago, and that's really good. We're seeing that they have that. We come over here and we look at some of the cash on hand, and again, we're just picking out some of these things, but again, good, not so great, better, and then it's going to continue to get better. It's going to continue to level out. The volatility in that metric will start to calm down a little bit, I think. Getting into assets over liabilities, that's really good. That's a really strong, quick ratio. Quick math, maybe 3 to 4 times with that. So that's a good thing to see. They're very solvent, so no issues there. We can see that seltzer surveys indicate consumers prefer quality over quantity. And another thing, too, that they talked about, and it's going to be way down here in this, but what consumers are really wanting is they're wanting a quality beverage over something cheap, and they're willing to pay that for it. And that's, again, another encouraging sign. Another encouraging sign is CFO was talking about how when they reach economies of scales with the new type of packaging they're doing, with how new the design for the bottles and for the cans is for these hard seltzers, when they can get a good demand level, a good supply level, and they can master the production process, the economies of scale kick in, and again, it just pumps up the gross margin. And so I think that makes a lot of sense. And so now this is how we're going to trade it. Like I said, we've been watching it, been very, very, very patient with it. We like it around this 530 level, between 500 to 530. If it were me putting on a new position and I had to start over, I would maybe get in, buy maybe 2-3% of my overall position that I want. If it falls down to below 500, I would start adding again, and then above 550, I would start building out the. So above the 550 level, yeah, we definitely like it there. From there, it would be a pretty easy ride for the rest of the year. Again, this is a longer term view. I'm looking at least 6 months to 12, and even longer as well. This is something that's durable. They have a durable competitive advantage. The margin's really high. They do well compared to everyone else. They're mostly in line. And so there's a reason why people are starting to pick up the interest in it. So that being said, I think long term we could look at this maybe by end of year around 900, possibly even 1,000. And those are just based on the fundamentals. Maybe 5% of that I'm getting from the chart pattern. And so that's where I would really like it there. It could be nearly a double in the stock price in itself, just knowing how ridiculously undervalued it is compared to the fundamentals. And so that's it, guys. Again, if you haven't already done it, go ahead and subscribe to the channel, turn the notifications on. Be sure to check out the Discord. Discord's a little bit different than what other people are used to. We don't necessarily focus on day trades or getting in and out. We look at providing solid, consistent returns over a 1 to 3 month and sometimes even longer time frame, especially in this case, using different types of plays like credit spreads, some options plays, and even going long on equity all the time. So that's it, guys. Thanks for checking it out, and we'll see you next time.